The following program was paid for by the friends and partners of WLMB TV 40 Toledo.
So when we talk about charitable planning, it's really thinking about how do we make our giving more effective, maybe more tax efficient. For a lot of people, it's how do we continue giving after we retire or even after we die? If we're passionate about sowing into the kingdom, how do we keep that going even after maybe our resources, our income stops coming in?
I want to welcome you to another episode of Main Street, the fastest half hour in television. I'm Dr. Jamey Schmitz. Of course, I'm joined by my co-host for the past 21 years, Virginia Bossa.
Hey, Jamie, great to be here, and we're going to have a wonderful show today. You know, people often talk about or think of and plan their vacations, they plan their retirement. Well, today we're going to talk about planning to give. Charitable giving, that is, and we have with us Darren Munn, who is the CEO and Chief Investment Officer of Munn Wealth Management. So, Darren, welcome. We're so glad to have you back here at the WLMB studio.
Thank you. It's great to be here.
Yes, Darren, welcome back to Main Street. Thank you for being with us. Hey, would you tell us, Darren, we're going to get right into this interview. Today we're talking about charitable planning. Please explain what is meant by charitable planning.
Well, just like Virginia mentioned, you know, if you take a vacation and you don't put any forethought into it and you just wing it, you tend to miss opportunities. So when we talk about charitable planning, it's really thinking about how do we make our giving more effective, maybe more tax efficient. For a lot of people, it's how do we continue giving after we retire or even after we die? If we're passionate about sowing into the kingdom, how do we keep that going even after maybe our resources, our income stops coming in?
So we see that charitable planning, it's very important, you know, but is it for everyone? You know, what do you say to someone who says, you know, I don't even have a regular budget?
You know, it's really important to plan. You know, again, and taking a vacation is a great analogy. When you look at, you know, most people are winging it, we miss opportunities. So I would say, even if you don't have a budget, one, you need to have one, right? You need to have a plan, but even every little planning helps. And so even if it's just, hey, I'm going to take 5 minutes to just think through how am I giving or how am I spending my money, because there's ways that people can save hundreds or even thousands of dollars in taxes if they just spend a little bit of time planning. It can make a tremendous impact.
Yeah. Now, shifting directions just a little bit, but, you know, the United States Congress last year passed a new tax bill. And one of the questions that a lot of people have is, you know, this whole question of how has the increase in the standard deductions, for giving impacted most people? Yeah,
I mean, the good thing is when most people give, we're not giving to give or to get the tax deduction, right?
Right.
That's really, that's an added benefit when we give. And so for a lot of people, when they gave, they would itemize their giving on their Schedule A on their taxes. Well, the standard deduction pretty much doubled in that tax bill that you talked about. And so for most people now, I think it's over 60% of people now no longer itemize. It doesn't make sense for them to itemize their deductions because the standard deduction has raised it. For couples in 2020, the standard deduction is now $24,800.
Yeah. So
almost $25,000. And so for a lot of people, you know, that's just, you know, they're not giving more than that amount, right? And so so we don't necessarily get a tax deduction, but there are still ways that people can get can get a tax benefit from giving if they do plan properly.
Yeah.
So what are some of those ideas?
Yeah.
Well, there's
you can tell we're really interested in that.
You're thinking on the same line, right? We'll talk about three things. You know, there's something called a qualified charitable distribution that you can make. There's a strategy called bunching. And not punching, bunching. Get that straight. I have children. You have
bunching with a B.
Right, bunching
right.
with a B. And then there's also pre-tax payroll giving. So there's three other ways that we can talk about that people can still get a tax benefit.
Okay.
And so that first one that you mentioned, the qualified retirement distribution, you know, tell us about that.
Yeah, you know, this is really cool, and it's something that's now permanent in the tax code. You know, for a while it was something that was renewed annually, but it's really a way for people that are retired typically to make a charitable distribution directly from their IRA. And so for people, if you're 72 and older, you're now required to take a distribution from your IRA every year. The government wants its money, right? You got to pay taxes. But there is a provision that allows you to make that distribution and send it directly to a charity. And then you don't have to claim that income on your taxes. It bypasses your tax return altogether.
So it's still kind of a way to kind of get around the standard tax deduction.
Exactly.
that doubled. So you still get a benefit.
You still get the benefit, and you don't even have to itemize. And so you can do it to pay your tithe. So if you're just paying your tithe to your church, you can have that money sent directly to your church. If you want to support WLMB or one of the other
hey, I
fine
like that
ministries,
one
yes, absolutely, WLMB.
Let's pause there.
But you have to have it sent directly to the charity that you want it to go through. But it's a way to save money in taxes directly from your IRA for those that don't need that money to live on.
So there's kind of a workaround for the regular thing that people used to do, which was itemizing if they were giving less than most people, $24,000 a year. Okay.
And especially for retirees, in many cases, my guess is they're itemizing far less because if they're not earning as much, in a lot of cases, retirees aren't giving as much as maybe they were in retirement. And so, it impacts them even more because, they're not getting the benefit of the itemization.
All right, so the second thing that you mentioned was bunching.
Bunching.
So what do you mean by that?
Yeah, this is something that most people have probably never heard of. And prior to this update in the tax code, it wasn't, it was something that was rarely used. But because there's a lot of people that are giving, and it maybe puts them right up to that threshold, that 24,800. And so maybe they're just over, and so they could maybe deduct 26,000. But that extra $1,500, there's only a small incremental benefit. But what we help people do is, let's say you just give every other year, and you double up or triple up your deductions in 1 year, and use that for your giving over the next 3 years. Oftentimes we help people use a tool called a donor advised fund. And it's basically a charitable checking account. So if you put money in it today, you get that tax deduction all up front.
In that given year, right?
In that given year. So let's say I'm giving $15,000 a year. If I put $30,000 or $45,000 into this donor advised fund this year, I can use that, I can spread it out and give it over the next few years, but I get that tax deduction all in this year.
In that current year.
In this current year. So I can now itemize this year, and the next year or two take the standard deduction where I'd be well below the threshold since I'm not giving charitably. I don't have a deduction those 2 years. But it's basically it's bunching multiple years of giving into 1 year. You can spread the giving out. You can give it all up front if you want. If you want to go ahead and send that money onto your church or WLMB or any other ministry right up front, you can. But it's a way to itemize and get the benefit of that, but then also get the benefit of that higher standard deductions for the following year.
Very good. Therefore, the term bunching.
Yes,
Bunching,
yes.
yes.
Love it. Not punching, but bunching.
Yes.
With a B. He is a boy.
Yeah. So Darren, the third thing that you mentioned was the payroll giving program.
Yes.
Talk more about that.
Yeah, now most payroll giving programs, unfortunately, are not pre-tax. So, many of the common ones that people are familiar with are post-tax payroll giving. But it is possible, and we have an organization locally that can help companies set up a pre-tax payroll giving program. And that's key, because in order to get the benefit, it really needs to be pre-tax. And so if the dollars, if it's structured properly and the giving is done on a pre-tax basis, then that's a way then people no longer have to itemize. And in fact, what you will find, the statistics show, is that payroll giving programs are the single most missed tax deduction anyway, right? Because people forget about it. It just comes out of their paycheck, and so they never even deduct it. Well, now most of those people giving, they're not itemizing anyway. So not only are they forgetting about it, but it wouldn't really help them anyway. So we think it's even more powerful if you structure a pre-tax giving program, so that way people don't even have to worry about the deduction. It's already coming out pre-tax.
So this is really the third way to, kind of counteract the standard deduction.
Yes.
So let's give our viewers a real-world example, and let's just use round numbers. Okay. Let's say that someone's paid $100. They get a payroll check for $100. How would they set up this program in a way that would be the most tax efficient, less costly to themselves, but using a $100 bill?
Yeah, absolutely. And what will help companies do is, each employee would say, hey, I want to take 1 or 2% out of my salary. So if we say 1%, for every $100, it would be $1 that their employer holds, from their pay.
So the employer holds it.
The employer holds
Okay,
it. Yes.
all right.
And that's the key. In order for it to be pre-tax, the employer has to hold it, before it goes out to and there's some other rules that have to be followed. But basically, the employer holds it, and then actually makes the contribution to the charity that's been designated or set up in that process.
Yeah, so it's the most tax efficient way, and it also allows you, as one, if you know the Lord as one of God's children, to give the most tax efficient way and still help that charity to the maximum amount possible.
Right.
That's really the big goal here, right?
Right. I mean, we really believe that planning and taking advantage, if there's opportunities to save money in taxes, that's part of stewardship, right?
Right.
If we can save money, and let's say you can save even $100 or $1,000 on your tax bill, well, that's more that you have to give, right? You can either give extra, or that's more you have to live on, and otherwise use the resources God has given us. And a lot of people think, oh, it's cheating the government. No, these are the provisions that the government has put in the tax code, and it's really, I think it's part of our stewardship. Part of being a good steward, to take advantage of those opportunities to save money in taxes.
Yeah, and really the reason the government has put those provisions in there is because the government realized that they cannot do all the things that charitable organizations do. That's why they give you a tax benefit. So many different fields of human endeavor where people need help can be helped by nonprofit organizations.
Oh, absolutely.
Yeah.
Yes.
So it's the way the government's, it's
Yeah.
encouraging people
So
to
it's
give.
not cheating,
Yeah.
as he said. But we got to know what the provisions are and use them to give the most efficient way we possibly can.
Yeah, and I think too, it allows us to really direct, how those dollars are helping people. I believe, and I think a lot of people watching will share the belief that, if we are trying to help somebody, when we can do it in the name of Christ, and we can, impact them spiritually, not just, maybe they're hungry, great, let's give them food, but let's also give them love and serve them in the name of Christ. And Scripture tells us, when whatever we're doing for the least of these in His name, we're doing it unto Him. And so it's a way for us to impact the kingdom at the same time. And I think that there's such a greater impact if we're doing it in the name of Christ than if the government's doing it randomly, and we know that tends to be less than efficient.
You're being very kind.
Yes.
Well, this is a lot of great information, and so we hope that people will be encouraged by it to give. But we also have some more great information, even for you business owners out there. So we need everyone to stick around.
It's even more impactful if you can get involved personally, not just, sending money, but hey, maybe I'm going to go volunteer at this place, or maybe I'm going to spend extra time praying for this particular place, because if we're giving and we're praying for God to bless that, I think the benefits are magnified.
Now, back to Main Street.
We're talking about charitable planning with Darren Munn, who's the CEO and Chief Investment Officer over there at Munn Wealth Management. And Darren, we're going to continue this great conversation, and specifically right now, let's talk about business owners and how they can make their giving more tax efficient.
Yeah, I mean, it's great for business owners because there's even more opportunities that business owners have to give in a pre-tax or a tax-efficient way. So we talked in the first half about a pre-tax workplace giving program. So, that's a great way for business owners to give. Another way business owners can have, can kind of bypass that whole standard deduction issue we talked about, is to give in the form of sponsorships. Munn Wealth does this a lot, where, a lot of our charitable giving is done, directly to ministries. We sponsor events and things like that. And then it's a marketing expense for the business owner. And so it goes on their, the business part of their tax return, and you don't have to worry about itemizing that deduction. So it makes it a much more tax efficient way of getting money into the hands of charities and ministries.
So let me get that straight, just to be clear. So you can actually take a tax deduction for a sponsorship or an outright gift. You're not going to be too, well, unless you exceed that really high threshold.
Correct.
So, but sponsoring things is a good way to, give and support that ministry anyway. And we certainly know every nonprofit out there usually has some event that needs some sponsorship. So that's a great idea as well, how to
Yes,
maximize.
absolutely. And the reality is,
Never thought
a
about
lot
that.
more people, a lot of people have a side gig, hey, maybe they do, they're cutting lawns on the side, or they've got a babysitting job, and a lot of people actually have a business. And they don't really think of it that way. Well, their giving could be done the same way. They can structure sponsorships and give to the ministries that they support in that way. So you don't have to be a big business owner. You can be a single person business. It's just a side gig, even in addition to a full-time job, and you can still structure your giving that way. So that's a great option for business owners. Another option business owners have is they can actually give a part of the business to charity. And so, we can use the same tool that we talked about earlier, the donor advised fund. That's oftentimes a good way to do it, is to give a part of the business to the donor advised fund, and they can actually deduct the fair value of that part of the business.
Let me get this straight. So if you own a small business or large business, you could technically give, say, 10% of that business into the donor advised fund, and then give gifts out of that.
Yes.
So
you can.
shocking. I
Yes.
did not know that. No, I
There's
never
multiple
would have
benefits
thought of
that come from that. One is, if you, let's say, if you give it, well, there's nothing really to give out yet because it's not cash, right? It's a 10% interest in that business, but 10% of the earnings of the business now you don't have to pay taxes on, because it's going, it's going to the donor advised fund, which is a tax exempt entity.
Yeah.
And I'm oversimplifying the process.
Right.
So, but the reality is that that's one way to save money. You can then also buy that back from the donor advised fund, which now becomes cash that your donor advised fund can give out. And so there's just a lot of great opportunities for people that are business owners to enhance the tax efficiency of their giving, and really to leverage. I mean, there's dramatic leverage that can come. And so if you follow that scenario through, let's say you started a business 20 years ago, your tax basis is zero, and if you now give a part, let's say you give 25% to a donor advised fund, and then you buy it back. Well, now all of a sudden, if you're buying it back at today's value, that's a much higher level. Right. You've now just reinstituted your cost basis at a much higher level, and so you've eliminated a big part of your tax liability that would eventually hit in the future, or if you would go to sell the business at a later date. So tremendous power. It's crucially important for business owners, especially, to take some time to plan their charitable giving. It's incredibly powerful. They can save hundreds, thousands, even tens of thousands of dollars in taxes.
Yeah, let me go off script here just a little bit.
Oh, no.
But let me ask you this. This is the generation that is leaving more, transferring more wealth and assets to their children. Is there a more tax efficient way for people that have accumulated, wealth, but they intend to give it to their children, but maybe they want to give it to the children, but they also want some charitable benefit in doing that? Talk to us a little bit about that.
Yes.
I've read some articles, but I don't really understand them. That's why I brought you in here as the expert.
Yeah, that's a great idea. I mean, there are ways you can do that, and there's multiple tools, but one of them is called a charitable lead trust. And there are a number of different structures, but I'll just talk briefly about that. There are things you can do where you can, give the money to this particular trust. The earnings can go to, let's say, charity. So that could be your annual giving, and then when you pass away, then that money can go on to your heirs. But you get a tax deduction right up front.
In the current year.
In the current year, to give that money. You could do it the other way too. There's something called a charitable remainder trust, where you put your money into this particular vehicle. You can take the income from it for the rest of your life. So you're not. You can still get the benefit from it if you need that money to live. But then when you pass, then that money goes to charity. I would really encourage people, if you plan on leaving money to ministries or charity, when you're gone, there's a huge advantage to give it while you're alive, because if you wait until you die, you don't get the income tax deduction. And so most people, they think, oh, I'm going to leave money to my church or charity when I die, but they're missing out on a huge deduction for income taxes. And so if you can structure it in a way while you're alive, not only do you get the benefit of seeing it while you're alive, you get to see the impact while you're alive, right? But you also get this tax deduction that you would totally lose out on if you wait until you die.
Yeah. Do your giving while you're living.
That's right. Do your giving while you're living.
This is a lot of great information.
Yeah.
So what do you have? What advice do you have for people who have retired, no longer working, but they still want to maintain their giving?
Yeah, absolutely. I would encourage people, especially those that are approaching retirement, to plan ahead. And so I'll give you an example. We had a client that we worked with, and probably 3 to 5 years before retirement, we realized, and he had made a comment, hey, I wish I could keep giving after I'm retired, but he didn't think he could. But what we did is we structured a plan where he started utilizing this donor advised fund that we had helped him set up. And so the last several years of retirement, he put a big chunk of his salary. They didn't need all of his salary to live on. So he kind of front loaded this donor advised fund. So by the time he retired, he had enough in there that in addition to the Social Security and other income he would have in retirement, he could still maintain the same level of giving he had while he was working. So if you're able to plan ahead, it's powerful that you can maintain the same level of giving even in retirement. Also, consider the qualified charitable distributions that we talked about earlier. But the key is really to have a plan. There are opportunities and ways for people to give. Maybe it's even, hey, I don't really need to, but I'm going to work part-time just to have a little extra giving money, right? And so there's really a lot of ways that people can continue their giving. You don't have to stop giving when you stop working.
Yeah, I love that. Do your giving while you're living, so you're knowing where it's going.
That's right.
All right. So how do you, Darren, how do you recommend people determine where to give?
Something, again, is really important for people to think about. I encourage people to think of, first and foremost, what are you passionate about? And where do you want to have an impact on your kingdom? God calls each of us to different things, right? So what I'm passionate about, the two of you may not necessarily be passionate about. And so
kind of like people have different hobbies.
That's right.
You're like, how could you even have that as a hobby sometimes?
Exactly.
Stamp collecting,
Right.
What?
And so
sorry to all stamp collectors out there in TV land.
I would really, think, because it's even more impactful if you can get involved personally, not just, sending money, but hey, maybe I'm going to go volunteer at this place, or maybe I'm going to spend extra time praying for this particular place, because if we're giving and we're praying for God to bless that, I think the benefits are magnified. So I would encourage people to do that. I would encourage people to look at, the ministry you're giving to. Are they using their resources are they being good stewards of those resources? And so there's different resources. There's an organization called Charity Navigator. For Christian ministries, there's the ECFA that looks at finances of the ministries and really gauges, hey, are they being good stewards of these finances? And a lot you can tell if you get involved, you can see, hey, man, I know this organization. They're operating on a shoestring budget. They're using the money in good ways, and they're having an outsized impact. And so I know those are the things I kind of look at when I'm giving. I want to know that the money I'm giving is really being used to impact the kingdom and is really being
now, Darren, you have had a wealth of information here, and some people say, I don't even know where to start, who to talk to. I need a financial advisor. We're going to recommend people see you, but there are people that maybe are an hour away, quite a drive. What should people be looking for when selecting a financial advisor? Yeah,
I would think the first thing I would say is find an advisor that aligns with your values. And so, a lot of the clients we work with, that's what we hear. Hey, I wanted to be more generous, and my advisor told me not to, right? We say, no, it's important for people to have that alignment with the advisor, that what the advisor is recommending, especially if you want to follow biblical principles, it's great to have an advisor that follows biblical principles.
Yeah, a Christian is going to have a Christian mindset.
Right, but just because
you
they're
want
a Christian,
somebody
right,
to work with that has that as well.
But that doesn't necessarily mean they're following biblical principles. And so there's an organization called Kingdom Advisors, and they have a certification called Certified Kingdom Advisor that Christian advisors can go through, and it's a very rigorous, very academically intensive training program that incorporates biblical financial principles, and as part of that, the advisor is also committing to incorporating those principles into their advice that they're giving. And so people can go to kingdomadvisors.org is their website, and they can find an advisor in their area that has gone through this training process. So that's one way. I think it's important to work with an advisor who's a fiduciary. You want an advisor, and what that means, it's a legal term that means the advisor has a legal obligation to do what is in your best interest. And so not all advisors follow that standard, but I think it's an important standard that advisors should follow.
Yeah. Now, Darren, one of the other hats that you wear in life is that you're also the chairman of the board of the One Voice Foundation.
Correct.
Would you share a little bit about that ministry effort?
Yeah, One Voice Foundation is a foundation that really focuses on serving donors and helping them to give more efficiently, more effectively, really magnifying their giving. And so a lot of the strategies we've talked about today are things that One Voice will do, especially when we're talking about the business owners and things like that. So One Voice will come alongside a donor, help them put together that plan, that giving plan of how do they make their giving more impactful, especially when we think about after their lifetime. And so One Voice, a lot of donors will want to set up what's called a legacy fund. And so this is a fund where people can leave money, to continue supporting a cause or a ministry long after they're gone. And so it can be something that's in perpetuity. You can specify, for a certain number of years, but it really allows people to continue to support what they're passionate about, even after time, on earth is done here.
All right, wonderful. Well, a lot of great information. And where can people, find you, learn more about Munn Wealth Management?
Yeah, our website is munnwealth.com, and we're local. We're in Arrowhead Park in Maumee, Ohio, so it's fairly conveniently located. And our phone number is 419-794-0536.
Will you come back and visit us sometime?
I would love to.
All right, great to have you.
Thank you.
Well, thank you, Darren. Well, thank you for joining us today on Main Street. Be sure to join us next week for another great episode.
We hope that Main Street has been a blessing to you today. Please feel free to contact the following to learn more about the topics discussed on today's show. WLMB would like to thank all the faithful supporters of WLMB that make this program possible.